Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed, as I'll keep updating stuff over there as well. First of all, this bull market just keeps pushing up here. We've been going for 4 or 5 weeks now, and we're at options expiration today. So I'm expecting a little bit of softness into the next week, but I still think our big trend is up, and I've got some charts to talk about into that. So for our agenda today, the sector rotation is getting quite strong. Actually, we're seeing lots of moves. The financials, again, on Wednesday, I mentioned they were rallying, and they continue to rally. Today, we're going to talk about semiconductors, railroads, the internet index, footwear, and drug retail. And the reason I want to focus on those is because as a group, they're all starting to move nicely and they're working pretty well together. So let's get into some of the charts. And I want to start off looking at point and figure charts and the gallery view of some different areas. So here is the Semiconductor Index, and what you can see is we're pushing up above the January 11th high, or trying to push above it right now. Momentum actually pulled back enough. This is a 10-minute chart, but pulled back, and we're starting to turn up again here. So we'll just keep watching the rate of change. But you can see that even using the Alexander Elder candles on the daily, we did retest that low in early January on the semis, and now we've taken off to the upside. Lots of people are expecting another retest way over here. And I think the bigger issue is I want to talk about some specifics when we get into 2016, and we'll go through that in just a moment. Our PPO is now in positive territory. That's very bullish, and that's a good place to keep looking for new moves. So what happened back in 2015 was we made this low in momentum back here, and then we rallied up to zero, and then we came back down again, and it was this second test that took off to the upside. The market, 4 months or 5 months apart. But in the meantime, this was still a huge rally, 583 to 685. So it was up almost 20% in there. And then it pulled back and then took off again. So lots of people are predicting that, we're just getting started here and we're going to have this big rollover. Well, even if we do have a big rollover, I still think you want to enjoy the 20% move while it happens. And so you can see back here, we got up to the 40-week moving average installed at that level. And here we are well away from there. We still almost 10%, maybe 8% away from the 40-week moving average. So I still think there's some upside to go in this market. If we look at the point and figure chart, what you'll see here is this is trying to break the prior high right now, and that's what we showed on the 10-minute chart up at the top there. But, this breakout here, we're already on a bull market signal, and the reason, so we're on a buy signal when we went above this January high. And then we're on a bull market when we broke through this red downtrend line with this X here. And so that draws this blue line in here. And so now we're on what we would consider to be a big bull market. So a breakout here would lead to higher highs and higher lows in a big bull market. So that's exactly what we'd be looking for. Okay, I want to go across the indexes a little bit, because they have a few things going on that makes them a little more interesting right now. So this is the SPX, and you can see that we're going up to 2660 here. On the daily view, there was reasons to consider this level to be resistance for a couple of things. One was just it was a prior support, so then that would make it resistance. And now we're through the 50-day yesterday, and we're trying to rally here today. In terms of momentum, we're just getting back to zero, so this is an important place to be aware of. But we still have almost 100 points to get to the 200-day moving average, which is, for the most part, flat. Looking at the weekly view, you can see here that we've had another strong week this week, and you might remember Monday started down, and everybody was probably thinking, okay, here comes the bear again, and we're going to roll over. But it's not uncommon to have at least 1 day a week, sometimes 2 days a week, that you didn't close higher. So just in a big weekly perspective, you want at least 3 days a week to be higher, preferably 4 days a week. And if you can get that, so if we just go back to the daily here, Monday we closed down a little, Tuesday up, Wednesday up, Thursday up, and now Friday up. So this is like typical bull market stuff, and very simply, just counting the days is quite easy. Now, looking back at 2016, you can see that we had kind of a joggy start, and then we got onto these green candles, and when we got onto the green bars, we went up for almost another 6 or 7 weeks. Looking now, what we've got is we've just got our first green bar. Like, we could still run here for another month and a half. And I know lots of people are calling for this bear market. And you can see when we got up to the former highs, that caused a lot of resistance. Well, we have a long way to go to get up there. And, in general, for the most part, the market is shaking off the negative Tesla news, the negative Netflix news, the negative, somebody said there was another shoe to drop in Apple, and I couldn't help but think there's probably another apple to drop in Apple. But you're looking at this market that is trying to go higher. The financials, Citigroup was light on revenue, and it still traded up. JP Morgan came in a little light, and it still traded up. So the market is pushing higher regardless of the earnings data. They're looking on to next quarter. So try not to get too enveloped by the news flow out there and be more enveloped by the price action. But we're up 4 days this week again out of 5, and we've got, negative news flow, government shutdowns, all that kind of stuff, and we're still breaking out to the upside. So I would continue to say, try to keep your optimism, try to stay in the market. We haven't gotten anything that tells us we're hitting a new bear market. There's nothing to say we're weakening. We've got lots of sector strength. So on the S&P 500, we would go back on a bull market signal with a move through 2676. So that's 20 points out of here. So we'd need to go through 2677. And the moment we got that would draw a new blue line starting here. So in general, things are still moving right along. Now let's just look at the NASDAQ, because what you'll see on the NASDAQ, we've got a trend line here in momentum, and this is just starting to turn up as these earnings come out here. So we could still rock to the upside very easily here. There's no real drifting of momentum, so we've still got lots. The histograms aren't exactly rolling over really quickly like this. The momentum is still very, very high, and we're pushing up nicely. And on the weekly chart here, we're through the 10-week moving average and pushing up to that 7,000 level would be the 40-week moving average. Our PPO still hasn't even crossed yet, and we could push significantly higher. Back in 2016, the full stochastic went all the way up, and it was like a 9-week run, not necessarily straight up, but 1 week in there was a jog, and then it just kept powering higher. So my suggestion would be that the price action is outperforming the news flow, and when that's happening, I think you have to stay bullish. Now on the PNF chart, we have already crossed through this red downtrend line, and we're back on a bull market. So again, the bull market is defined by the big blue line, and then a buy signal is when the PNF chart makes a higher high. So in this case, we made this higher high in late December, and this was January here, and we came down, and then we pushed all the way back up. So this buy signal that we're sitting on, this is a buy signal, but now we've actually turned to a bull market on the NASDAQ from a PNF perspective. And we go back to the September market top and October. So right in here, we made very little progress in the months, and then all of a sudden, boom, down we went. So big moves in there, and obviously the swings were major, so lots of 3-box reversals, and now we're heading to the upside. So the NASDAQ's already back on a bull market. Okay, let's go to the Russell, because it's nowhere close, and it's a good thing to pay attention to. So the Russell continues to shoot up here. Momentum is still rising. There's nothing telling us to stay away, and on the daily chart keeps pushing up here, and I know a lot of people are saying sell, sell, sell. The Russell is getting to this resistance level it was formerly at, call it 1450 or 1500, right in this range, and so we're just getting there. But I think when you look at the point and figure chart, you can see we're a long way from getting to a new bull market on the Russell. So when the Russell gets up around this 1533 level or 1530, then we'd probably start to wonder if it's actually got the power to keep going. But based on all of the chart action so far, everything is good. Looking at the Canadian market, and the reason I want to show you is just the chart sets up quite differently. So this thing has just been powering straight up, and we're right at this prior highs from November, December. And looking on the weekly chart that's sitting right here, so we had a green bar last week, and now this week we've got another green bar, and it just keeps pushing. So obviously this 15,500 level is going to be important, 15,700. Our PPO is actually trying to cross. We'd need a strong finish today to actually push it above its signal line. But this is looking very good. But on this PNF chart, what we're looking for to get a new buy signal is just moving above these two prior highs. So it has to get to 15,424.2 to get up to make a new buy signal for the TSX. And then the second thing would be to get back on a bull market trend, would be getting above this red downtrend line. So just hopefully by working through those gives you an idea why I think we should still continue to maintain our bullish presence. We're still getting higher highs every day in all of these markets, almost every day. So no real reason to start to get scared out of the market, even though everybody's calling for a top. You can move your stops up, but it doesn't mean sell, because if you'd have sold earlier in the week, you'd have missed a pretty good run. Okay, let me just quickly talk about Tesla, because it's such a hard chart, and you can just see it has worked traders. And even as late as last week, let's just turn on a weekly chart here. Tesla was starting to look like it just wanted to come down and reset above zero here. And with the news flow today, it's still coming down. It's holding at its 40-week moving average, but it's right in the middle of the range. And so this is a very difficult time for traders to pick sides on this trade. But if Tesla just comes down, call it to this 250 level again, and starts to turn up on the PPO, I think that would be a nice entry. And if it doesn't hold here and it rolls right down, I mean, there is a lot of competition coming for their electric cars. And so with competition, obviously, that'll make it harder for them to sell more. They won't be unique. There'll be lots of other companies doing it. And so I think with that, this Tesla chart's pretty hard right here, but either try to buy it at support down here, or wait for the breakout, or range trade off moving averages, whatever you'd like to do. But it's no slam dunk that it's going either direction. Okay, let's get into some of the semiconductor stocks. And on Wednesday, I ran a scan, and again, we're doing weekly scans here, so this is just not to try and day pick stocks. We're looking for big uptrends, but here we're going to go into the semiconductor stocks, and I've just got a few of them here and just work through. I want to explain my indicators. I was having dinner with a friend last night, and he mentioned, one of the things that I find is sometimes it's over my head how fast you're talking and some of the acronyms. So I want to talk about the indicators I'm using. So the SCTR is really like a sports ranking of teams, and the higher points ranking on the SCTR, so in this case 99.5, you're better than 99.5% of the other teams or other stocks in your group. So in this case, it's the large cap group, and Xilinx has been up here for a couple of months already, but it looks like it wants to start going through the December highs again. And really, this chart is just starting to break through this, call it $75 level that it's at for a while, but it's clearly becoming one of the strongest semiconductor stocks. And in terms of relative strength against the S&P 500, so this compares it against its peer group. This is a boat anchor. The S&P 500 has a mix of, industrials, financials, technology, spread across the board. There's a whole bunch of different sectors in there. And so one sector doesn't dominate it enough that it can change, that everything goes when, let's say, technology goes. It's heavily tilted towards technology, but still there's a lot of breadth in there with other sectors. So this compares it to its large cap peer group. This is comparing it to the S&P 500, which can be, I'll call it a broader mix of large cap stocks. But when you're outperforming the S&P 500, for a lot of institutional investors and portfolio managers, their mandate is to outperform the S&P. So if you're not buying stocks that are outperforming, you're probably going to underperform. So here we have Xilinx, and the full stochastics. What this does is it tells you where the price is within whatever period of time. And in this case, I've got a 14-week period. So roughly that's 1 quarter. 13 weeks would be 1 quarter. So 14 weeks. And what you're looking for is from the last 14 weeks, so in this case, it'd be 3 months, right? So we'd go back to the beginning of October. So from this range in here, where is the price? And it's towards the top 80%. And this is smooth. It's taking an average. If you just did it daily, it would kind of whip up and down. So we use a smoothing line, and it's saying it's up near the top of its previous range, which is good. And you can see in a bull market, it tends to stay right up above this 50 level and keeps retracing and cycling back up. The volume obviously just tells us the level of interest. Now this thing is trading 10 to 20 million shares a day. I think that's fine. There's no real sort of huge capitulatory volume or anything like that. So we want to keep watching. And in terms of momentum, what the PPO does is it takes the percentage change and over a period of time, and it helps us see when the shorter term line changes faster than the longer term line, it will turn things over both directions. Well, we're still trending up here, which is very nice. And you can see through this whole bull market run in here, it just oscillated and stayed up nice and high, and everything was fine. And then when it started to drift lower, this was a little bit more problematic, but it still didn't move down a long way. But since roughly July, it's been on a really nice move. And even with the overall market correction, it pulled down quite a bit in October, just below its 200-day or 40-week moving average, and then shot up. So just to refresh, so in general, I want to check out I'll call it the sports ranking of how strong this stock is directly compared to its peers. So this tells me it's outperforming, but it doesn't really tell me how many other stocks are outperforming. We know out of a group of 500 stocks, the average is the S&P 500. And so this is just going against the average. In this case, it's telling us we're better than 99% of the stocks, not better than 50% of them. So it's pretty important. I think this is an important information piece. On the full stochastic, again, it's where it is in its trading range. And then this is your actual momentum line about how price is proceeding. And so when price starts to, make lower highs and lower lows in momentum, that's when we start to get a little bit more worried. Well, we're clearly not doing that right now. So in general, this looks very, very good. Okay, so that was Xilinx. Now we can quickly just go through the other stocks and look at the same thing. So here's Broadcom, and what we see is it's just started to move into the top quartile in terms of peer performance. It's doing very, very well. Relative strength, it's breaking out to new 52-week highs recently. And look at this price action. It is sitting just glued to the top of this. And if we zoomed in on the last 2 years here just to see this, these are really big levels here, call it 250, and we're just pushing up to the 260 level. So we've got a little bit more price action in this one, I'll call it month, up here at 271, 275. But in general, we're near the top of the range, and it looks like we want to start taking off to the upside. The PPO momentum has been on a downtrend for a year and a half and has just started to make higher lows and higher highs and has moved above zero. This looks very bullish to me. Okay, getting into XPRI, big gap up here, and it continues to work its way higher. So this is bullish as long as the trend can last. And you can see when it was in a downtrend, this scooter ranking showed that it was not doing very well and it was a poor performer. So that alone would say you don't want to stay invested in this stock. It's underperforming its peers and it's underperforming the S&P 500. And the full stochastic just kept saying, I'm in the bottom of the range. I'm in the bottom of the range. Notice how this never got back up even to the 80 during this bear market period. It stayed down in the lower half, with this one exception above 50. And, you got a sudden move and then it rolled right back over. So that's one of the reasons that we want to keep being aware of how the relative performance is to its peers. It still hadn't even got going, and it was below its 40-week moving average this whole downtrend for 2 years. Now it's changing that direction. So I don't know what's changing in the company, but it's clear that the investors are starting to think about it differently. Advanced Micro Devices is starting to turn up right now, and its PPO is right at the 0 level. In terms of performance to its peers, it's up in the 90% category, so that's very strong. Photonics breaking out of a big 1-year base here, and looks like it wants to push to the upside. So this chart has a lot of huge gaps in it. So for me, I would avoid this stock just because I can't handle these wild 1-week swings every quarter, it seems. Semtech, this stock is coming, so it usually stays above 0. It came down, it's right at 0 and starting to turn up right now. So to me, this is a nice important buy signal, and you can see that it behaves better than 50% of the stocks a lot of the time, and for the most part better than 75% of the stocks. So this makes it pretty good. And looking at the relative strength to the S&P 500, it has a slight level of outperformance. It kind of is trending up, but for the most part, for a lot of this period here, it's been performing with the S&P 500, no real outperformance there. So again, this stock looks like it's ready to start turning up again. Don't get me wrong, this is a very nice chart. Over a 3-year period, it's been a triple, so nothing wrong with that. Here's Cree, and it's breaking out above 6-month highs, and looks like it wants to go test its prior highs. The PPO is just moving above 0. The full stochastic is up in that 80% range. Just because it starts to wobble up here, like this is 3 months that it stayed up here and just kept going and going and going. So when you get a full stochastic above 80, it doesn't mean that you're overbought and you need to sell it. It just means that the stock is in strong position and wants to keep going. And even in here, when it worked its way, when it wobbled in here, the whole semiconductor space was changing. But at this point, it started to restart its strength. And going back looking for a couple of years, this stock had nothing going on. Then most of last year, it was performing well. It's had a pullback, and now it looks like it wants to keep going. So I would continue to say this looks really good here. Lattice Semiconductor, this one is just starting to turn up in momentum. I'm not thrilled about the momentum line here. This is a little bit too sudden for me. So I'd probably just pick one of the other ones. But, the full stochastic moving above 50 is bullish. The relative strength doesn't tell me anything too great. And in general, over the last few years, it hasn't done much. So I would stay away from this one, even though it shows up on the scan. Neo Photonics, what you can see here is there's this big wide 1-year base here, and we're living in it, but we're just starting to try and bounce up. So again, this stock doesn't have the kind of uptrend I'm looking for. I will say the scooter ranking is starting to improve, but nothing too great. This Infi Corp, just gently downtrending, so I'd probably avoid it, but you are starting to get signals telling you things are getting better. And here's Max Linear. This one's been linear to the downside. The PPO is still below 0. And, the time to get in, it might have been back here when it was breaking this downtrend, but really it hasn't gained a whole bunch of momentum. So much like the other ones, I would ignore it. And its scooter ranking is at 67, so it's not bad, but it's definitely nothing great. And here's Intel. And the one thing I would say about Intel is it recently started to push up and outperform, pulled back into the summer, and has continued to try and strengthen against its peers. So I'd never count these big guys out. And they're trying to get back through the 40-week and break out to new 6-month highs just as the PPO goes above 0. That could be very, very positive. And of course, it's such a big company. There's lots of opportunity there. Here's Amcor Technology. what we see is, big PPO downtrend here that's starting to break. So I like that in particular. It looks like it wants to go higher. There's a new 3-month base here that is trying to break out. And the full stochastic has moved back to kind of the highest level since last March. So that's very bullish. The scooter ranking still has some room to go to really improve. On monolithic power systems, you can just see basically for the last year, no real price action, and the PPO continues to kind of make lower lows and lower highs. It looks to me like it wants to base here and try and go higher. Your full stochastic is putting in higher lows, so that's good. But I would just say there's better picks in the group. Looking at Mellanox, this has been pushing up nicely. I'm a little worried that in the last 4 weeks, while the overall market's been rallying, this has been going the wrong way. So I would probably avoid it just because it's had no strength in the last month while everything else was taking off. And this form factor looks like a bed. It's just laying flat here. So until it actually gets some upward resurgence, I would probably avoid it. I want to cover off Walgreens really quickly. Let me just grab my note here, and maybe we'll just type it in for the sake of time because we're about to wrap up. But what I wanted to mention on Walgreens is this particular chart. You can see that the scooter ranking has been underperforming for almost 3 years. Now it is pushed up into the top 75% and is just hovering around this level. It is not uncommon for a stock to kind of come up, come back, and then take off. So I see this big thrust up here, and then it obviously had a big downturn this week. It doesn't look ready for me yet, but if this is starting to come down over the next 2 or 3 weeks and just make a base in here, you might want to enter this because of this strong scooter ranking for the first time in 3 years. So after their merger, all of a sudden this looks like it could this could break out to the upside. So I'd be much more interested in this stock if it can just continue to make its base here. But this was a pretty steep drop into that, I'll call it late December low, and now we're rising for 4 weeks, which is bullish. We're back above the 40-week. This is a nice place to get on board. The full stochastic is turning up. For me, I would wait a little bit more until momentum has actually had a chance to flatten out and start to reaccelerate. I'll let somebody else try and make that bottom. We're going to run out of time to go through all of the railroads, but the big thing, I would just say as a group, they're looking really good. And here's iRobot. This stock has had wild growth, and then you can see that it kind of capped off in here around this 110 level. It's making a higher low right here, and the PPO is coming right down to zero and starting to turn up. So there's a lot of things I like about the stock. It's kind of reset. So after a big move up, it's got rid of all the weak hands, pushed up again, pulled back in the fourth quarter with everything else. And it looks like it's ready to start its upward drift again. So keep an eye on that one. The scooter ranking says it's very strong. The full stochastics is starting to power higher. I'm a little worried about the relative strength, but the stock can really start to accelerate. And when it does, it's great to get on board. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel. It is also played on StockCharts TV, which has a running list of technical charting information shows. Thanks for joining me. Bye-bye. This video will show you how to add a date line to your charts. So if you have a whole bunch of stuff piled up here and you want a date line farther down, there is a way to put it on there and how to move it. So down here under indicators, it's one of the options, date time axis, and by just moving it up and down with these triangle arrows, and notice this little blue arrow that moves with it, it'll help you position it exactly where you want it.